All right, so good morning, everybody. We're not going to do what we did last week, which is turn the recorder on and not turn the microphone on. It was good for me. Probably wasn't good for anyone there. So let's get this up and started. Start this over here. That ought to work. Incredible. Monday, November 4th. It's like November didn't even start, and it's already the 4th day of the month. All right. So we have good volume. We have good connectivity. Everything's great. So what do we see in the markets for this week? Well, first off, last week, it's always nice to do a quick review. The gold market has been in a, as it enters a seasonally strong period of time, it might have a little bit of glitch. I said it needed to hold 1309, and we did hold that 1309. We tapped underneath it. We didn't close underneath that 13,910 area. So one thing I wanted to make mention is that the gold market, that 1309 is pretty critical. And I think it's going to be, if it breaks it, it's going to be one of these type of long-range bars where it breaks it, it's really going to go down. The fact is that the weekly volume, the weekly moving averages, it's been sidelines, if you notice that. So we had this bar and that bar, and equal and opposite. So what's the overall trend? It's down. So this bar negated the prior bar, and the overall trend is down. I mean, the monthly chart tells the story here. The monthly trend is down. So I think one of the things that I wanted to express is that gold right now may have a little bit of a pop, and it's going to probably come back. And if it's going to be bullish, we need to take out, by the way, we need to take not this high out, we need to take that high out right there. This is approximately that 1348 area that we made on a daily chart. This was a low close doji. The market went down. This is a last conditional change candle, and it's above both moving averages. All right, so it's not, if I could bring this up to speed here, what I see in the market, if you're trading gold, and it's almost as if, the gold market's getting slowly and quietly liquidated, as are a lot of commodities, truthfully. And I'm a little bit nervous here for buyers of gold, because unless we actually, and I'm going to go over here to the data window so you can see this. So just in case you can't see the actual numbers, or you don't have it in front of your screen, it is the high from October 31st, Halloween. That high, 1341.60 to be exact. All right, so we need to get a daily close above that level to resume an uptrend in the market. Why I say that is because, A, it is a last conditional change candle, number one. So is this, but this is one that above that high is above both of those moving averages. So if we can get a pop in the market above that high, then it's like an A, B, C, D wave, and then you can get a spurt to the upside. All right, so that's the bullish, that's the best case scenario that we could look for buyers, bulls. All right, for bears, if the market pops up into this 1330 or 29, we can't even take that high. You watch out for that low that we made on Friday. If you take this low out, all right, then I think we got serious problems. Serious problems are, probably in the 1225, 1200 region, possibly, because they're going to try to take out that swing low for sure. And if that fails, then the next level are these areas in here that I see. So on a longer term performance, let's go ahead and take a look at when I'm looking at a lot of these commodities or commodity-based markets like gold. I mean, for some of you, it's capital intensive. I mean, to trade a one lot in gold is close to $9,000, depending on your brokerage firm. I mean, the exchange minimum margin, I think, is approximately $8,800, something like that. Don't quote me on that. I'm not a broker, so I don't have to get too official. But I believe the initial margin on gold, depending on your broker, is $8,800, and the maintenance is $8,000. So depending on your brokerage firm, they can't lower the exchange margin. They can raise them. So some brokerage firms may want you to put up more capital to trade the gold. And so that's why I say it's pretty capital intensive for a commodity. So with that said, if gold initial margin is $8,800 to hold it overnight, who wants to do that? You can't really trade the gold options. They're pathetic. The bid and asks are so wide. They're not as liquid as one would have thought. So what can you do? You trade GLD, plus they have just an incredible amount of exchange traded funds, which some of which we could go into talking about quickly. So let's see here. I didn't want to remove that, so let me get a different chart up. Y'all probably have heard of Dust, all right? Dust is a $34 instrument, right? And I think more importantly, we could start looking at some inverse ETFs on gold. Now look at Dust. It did generate a daily high close doji. One of the things that I think we want to kind of focus in on is ways to short gold if it fails. So how can you play gold? And I don't know if everyone's really into it, but DGZ is one. Let's take a look at DGZ. All right, it's a $14 instrument, right? So I think between what the capital is required for you, the liquidity, it all depends on what you're trying to get out of the market. But there are bearish ways to play it. There are some ETFs. There's the GLL. And as you can see, they all look very similar, but they're all just priced, or their capital is a little bit different. So there's the DB Gold Short ETN, Exchange Traded Note. It's a little bit different than an ETF, and that was the DGZ that I just mentioned. Then there's the DZZ, all right, and this might be something, it's very low. It's a $6 handle, but we probably want to see the market come back into some area like the 630 area, 640, something like that. And I'll be honest with you, I think that if gold is going to move lower and not higher, then this is a very small capital intensive instrument that one can trade. So with that said, I think it's important that at least we give you some insights as to some of the markets that you could look at, okay? So with that said, I'm a little getting very apprehensive on the long side of gold here, even though we enter a longer term seasonality of gold. If we take a look at gold, quite frankly, you'll notice that we actually have this instrument. Well, let's take a look at gold real quick. Gold actually has a period where it will move lower. If I could bring this into speed for us. Okay, so as you see here, from on or about October going into November, then it pops up, you know, but it has this like little sideways action. And I think from a longer term perspective, unless this market really gets some giddy up and go, notice that the monthly person's pivots are also indicating a bearish technical outlook. We have projected lower highs and lower lows. So if we break this little uptrend, if we can't pop above that high, if we can't get above that last conditional change that I was just referring to, then I think gold's got a little bit of a problem. You want to watch this this support area in here, that if we violate this handle, then I think gold's got a downside. So I just wanted to alert you to this and ways that you could look at playing gold in case it goes down. So you're not like scrambling, what do I do now? What's out there? At least you have information before it happens on how to play it, and three different, an ETN, an ETF, and different leveraged ETFs, the way you could play it. The DZZ, just remember, is it's fairly liquid. And but it is, you know, it's not going to get you rich quick, but it would give you a nice performance. I mean, if gold actually gets back and retests its lows, it'll test its high. I mean, and if it does, we're talking an $8 instrument. So, you know, not bad if you get a pullback in this market. Now, here's another thing. I mean, some of you chart pattern technicians out there might be looking at this and say, wow, on a monthly basis, wow, this thing looks like it could be a little continuation pattern, and since the trend is up, if this thing rockets to the upside, this thing could really blast off. So I mean, you know, is gold done? You know, longer term, as the Fed prints and global central banks print, you know, and you know what, this is about confusing to me to predict the global markets as anyone else out there. And all I could do is just look at the technicals and follow suit with the technicals. So with that said, by looking at the technicals, the question begs, is the overall market done? And last week, if I go back over here to pages, and we're going to go to index AD, save this real quick. All right. All right. So by looking at it, last week we sent out a tweet about the Russell having a low closed doji. I don't know if everyone got it. I said, you know, one of the instruments that you could look at was the TZA. And if you are not familiar with what the tweets are, if you go to our website, personsplanet.com, and you'll find all the information about Trading Triggers University, everything about what we offer here, you could find. If you click on the little tweet up here, right, if you click on the tweet index, you'll notice that it's combined with nationalfutures.com, Persons Planet. So anyone that signed up with National Futures, they're a part of, even though it only shows 300 followers, there's a bunch of, there's more of that because they're under the National Futures, which we changed over here. So moral of the story, if you get these, you can sign up to follow them, and then you can go down the list and you can look to get those tweet alerts. So I mean, one of the things is here, I mean, TZA, this was done on October 30th, may form a daily, so it gives you a chance to look into it before it happens. And that's what this is about. We're trying to teach people how to trade, to take identification responsibility for their own actions. And if you get the information after the fact, that really doesn't do any much good for you. But if you get an alert that says, hey, by the way, you might have this really high-powered signal, TZA is the inverse of the small cap IWM. And so if we got that low closed doji on the IWM, you get a high closed doji on TZA, at least it's a way to trade that market, which was really a great signal. More importantly, we talked about the TTU with the euro currency, and we had a potential for a daily low closed doji, which we discussed last week, and it did occur. So these are the things that if you don't want to trade futures, if you don't want to day trade, how can you take advantage of some of these great signals that we're getting and alerting everyone to? You could use the ETFs, the exchange traded funds, and even had mentioned in the trading room, you got the FXE, if you guys recall. I said you got the exchange traded fund on the ETF based off of the euro currency. So it's available to, that you guys can decide what your risk is and take a position in it. So really good stuff. And then even here, we talked about the great setups tweeted in the TZA, and I even said, listen, if you're long that TZA on Friday, get out of half that position, you're 21.38, and it was or better. It's had a great 3-day run, and you know, you just want to place the stops under balance under today's low, which was a breakout. So anyway, those are the tweets we try to follow up. I know Butch puts out a lot of the tweets that we talk about in the room, and I put out tweets that I see opportunities in trades. So therefore, these things may help you as we develop with the planning and scanning what the overall market's doing and how to take advantage of them, whether it's an underlying stock in earnings season, which has been very difficult, or trading some of these markets and taking advantage of them via ETFs for you guys that you might not have the luxury or the ability to day trade the markets, since a lot of these markets are capital intensive in the commodity markets, and so that leverage can put you at a disadvantage. So with that said, how can we help you trade these markets? And I think some of these ETFs, a little bit of education to find out what they are. At least you can get the information so that you can act on it rather than react after it happens. We don't want you to do that. So, all right, so where do we stand with the markets right now? The S&Ps on a daily chart, the only thing that generated a daily sell signal in the cash market, of course, was the Russell, and it's come right down to its monthly pivot. And every single index right now is generating or did generate a bullish bias to the upside. So we have, I don't know if we're going to see 1856 in the month of November, but one of the things that we have to watch this week closely, very closely, is the market breadth analysis, the advanced decline, because even though that the Qs went sideways, we did see a little pullback underneath that little moving average there. Even though the Russell had a significant pullback, not yet in as much in price as it did with the advanced decline, and it came with a little bit of attitude on with a volume, as I'm sharing with you here. Okay, so when we zoom this up, I can just tell you that if you take a look from a comparative basis, where's this close, and where's this on balance volume level, and where are we with the amount of stocks that had fallen, so the advanced decline ratio. So we take a horizontal line and we'd say, okay, so basically the close in price is at 108.71. So the last time we were that low, notice that price was 108.49. So price is a little bit higher, the advanced decline is a little bit higher, but based on that day, volume is a lot heavier. So if we get a break underneath the advanced decline, if we break underneath, and if you notice here, it's acting like kind of like an old resistance is now new support. If we break this level in the advanced decline and prices don't really move, I would be watching the advanced decline very closely, because that'll be a clue that there is further liquidation going on in the Russell. So it's going to be important to watch this on a daily basis, day in and day out. It's not important how the market really as much opens as much as how the market closes. So the NYSE did generate a daily sell signal. The only problem I have with that daily sell signal, it didn't have a lot of follow through. It almost formed a doji, and the volume upticked on a positive daily close. So with that said, you don't have enough information out here to say the rest of the indices are ready to roll over. So even the diamonds, which has been the redheaded stepchild in the investment community, it's the least performing of the 5 stock indexes that we follow. And you have all these peaks, and I mean anyone can take a look at and say, well, gee, let's take a look at these this market. We got a quadruple top, and typically, or do we just have kind of a, is it just a trading range in the market? Well, here's the thing. If we get a breakout, and there's only 30 stocks in the diamonds in the Dow, if we break out, which we haven't made new highs, if we make new highs, but we can't make new highs with the 30 stocks that are within that, then we have a bearish divergence situation, and it would come on a weaker volume, right? So we don't have that yet. Why? Because we haven't made a newer high. Odds favor the fact, though, that the market has been up here so many times, they want to break out and make a new high. There's probably a bazillion stops above the market, and I would say that at least in this market, you have to kind of watch this for the next couple days. The key importance is a daily close underneath that swing low that we had on Thursday, which was October 31st. So 155.10 in the cash market and the diamonds. A daily close under there will probably generate a daily sell signal, and that's that is going to be a cause for a concern and an idea to get probably short for a multiple day decline. Until that happens, we're still positive. On a weekly basis now, on a weekly basis, we did form a weekly in the Russell. The Russell's the only one. It's not quite an official doji, but it was good enough for government work, though. This market needs to see follow through. So if we rally and can't take out the, let's call it the 110 area in the IWM, if we go up there and it acts as resistance and you take out this swing low right here, all right, last week's low, because last week's low, as you notice, is acting the prior days, 1, 2, 3, 4 days highs is now acting as support. You got to take that out. You got to take that out in order to see a further erosion in the market. So watch those areas of the resistance of 110 and watch for a break below even a daily close below that 108 area, which is this area. A daily close underneath that low, I'm going to tell you, I think you got some serious you'll see some serious follow through. Every market formed a doji. The S&Ps closed a daily doji. The Qs, the diamonds did not. The NASDAQ did form daily, weekly dojis. What does that mean? It means caution. It means people were a little concerned. And it doesn't mean that we're getting aggressively short the market. There is cause for concern that we're going to see sector rotation because I'm seeing on an individual basis a lot of stocks within the Qs really roll over. And now I want to go into that. So what I want you to take away from this is you got to watch the advanced decline on the indices that I talked about. You got to watch the price points on the indices that we just talked about. And you got to watch that at the end of the day basis. So today, tomorrow. If I see it, I'll be there. I'm on it. Like, believe me, I'm on it. I'll be tweeting this stuff out some more. Okay? So I'll be watching that, and that's what I want you to be concerned with. In the meantime, you know, are there any buying opportunities? I mean, what if this stock market goes up forever, right? What if it isn't going to go down? After all, I hear more people think that it's frothy and overbought, yet I see a lot of some values out there. Some of the values that I see is this was our weekly stocks that generated weekly buy signals. All right. So some of the analog devices, ADI, it didn't generate a weekly buy signal. It just, you know, actually just exploded to the upside. And one of the things that's a little spooky is it's entering a seasonally. So there's some stocks here that just start to enter a seasonally strong period of time. Look at this volume breakout. So last week, you had this huge volume breakout. And by the way, folks, earnings isn't until the end of the month. So ADI doesn't even have earnings until the end of the month. So I'm not sure this is because of this volume, this wasn't really short covering. It's entering seasonal strong time period. It is actually outperforming the S&P. So this is one that's going to probably be bought on pullbacks. So, you know, if you do get lucky enough to see a pullback against, say, this high area right in here, analog devices, this is one that you're going to probably see continuation to the upside. And as you can see from the monthly person's pivot, there's still about $3 to the upside. I'd like to see a pullback here of about $1.50. I don't know if we'll get it, but you want to watch that. In the space of retail apparel, now here's one is the Abercrombie & Fitch. I'm starting a list of stocks that I want to present to people, our clients, that is probably going to see continued selling pressure into year's end for tax credit purposes. ANF this is one of the names. And unfortunately, Abercrombie & Fitch, even though it generated a weekly buy, it still did not do anything for me on a volume scale. So unless the stock comes back and just sits and lingers into its multi-week or 8-week trading range at the low end, I'm really not interested in this until we get another 4 or 5 weeks. But you want to go ahead and put that one on your list of stocks to watch, because if it is down near, say, 34, 33, something like that, towards year end, it's one of the names that I think is going to be one of those reversals going into January. Earnings, by the way, is coming out, and that's probably why we got a little pop to the upside, because earnings is coming out in the next couple weeks. Quest Diagnostics, I guess the one thing that is neat about this is that it still has a little bit more room to the upside before it kind of loses its seasonalities. But the daily volume was just enormous. But most importantly, it created not only a weekly buy, but it generated a weekly high close doji. So let's take a look closely at this. So it is in the healthcare service, and I mean, this is one that's probably not on a lot of people's radar. Why would I say that? Because this is not really trending. It's in a range. But the funny thing is, it's in a range and has multiple seasonalities, as you can see here, from about mid-October going into December. It has a little trend to the upside. So the fact that it had a high close doji, the fact that the daily volume was pretty strong, I think this is one that might give a little bit of performance to the upside. The bad news about this stock is the fact that it's been in a range. Unless it really proves itself, it's not going anywhere. So take advantage of the fact that if it is in a range and it's just going to bore people, you get a pullback to like 59.48, right? So I mean, you're not asking for a huge pullback, maybe 59.60, something like that. For the next week, we shouldn't take out the low of this breakout high close doji candle, right? So, you know, truthfully, you want to place your stops on a high close doji below the low of the doji. So you get, if we can, because of the depth of the market move and the fact that it's been in a trading range, if you get a pullback to approximately, I'm going to just raise the bar just slightly here. Let's call it 59.76, and you got stops at around 57.08. That might be one that you could see a move up to on a push to around 66. Another way to play this is if you take out these weekly highs over 62. So if this thing doesn't pull back and it just keeps going, if it breaks above 62, that's when you're going to see a bigger move. So watch DGX Quest. Electronic Arts, I'm just going to go through this list real quick. You know, that seasonal trend, I'm not interested in that one. But here's one that I just did a little bit of homework with you that I think might be one for the ages. This is Linear Technologies, LLTC. So Linear Technologies did generate a weekly high close doji. And here's one that I think if you get a small pullback to around 39, I don't know if we'll get it, but 39.90, it's another one that gave us a weekly high close doji. Stops, very small risk, upside pretty huge, and we're just now entering in a seasonally strong period of time. So Linear Technology looks pretty good from that perspective. Here's one, Eli Lilly. Eli Lilly, cold and flu season, and I'm here to tell you, cold and flu season, if you don't get your flu shots, it could be pretty nasty because it's pretty nasty cold and flu season. So with that said, I'm not sure Eli Lilly is the provider of, what's that stuff called, erythromycin, but they seem to kick in pretty well. So the long and the short of it is we did get a weekly buy in Lilly. It does enter a seasonal strong period of time. Only problem I have with this is there is no volume attached with this move. It is a weekly buy. You know, it is one of those stocks that it's not really performing quite yet. So we want to kind of watch this week and see if, number one, if we take out last week's high, all right, on a daily closing basis. If you close over that high, then you got an A, B, C, possible D wave coming to the upside, all right? So that's 51.21. So put that in your alerts to see if Lilly gets a run 51.21. Last but not least is the Masco, building products, capital goods. Notice that it does enter a seasonally strong period of time. It's been in a huge consolidation for pretty much 1, 2, 3, 4, 5, 6, 7, 8 months, right? It was in a monthly sell signal, and it immediately negated it and went back up. And all it's doing is just kind of grinding time. This is a $21 stock that could get ready if it breaks out of this consolidation. This is a name that could see $27 to $30 easily, Masco. And I don't think it's gotten a lot of respect But if you take a look at a longer term, and that's one of the things that you'll see with me here, boy, this thing, longer term, it's got this huge potential double bottom, which broke out above, and look what it's done. It broke out, and that old peak high, and there's the opening bell. That peak high has acted as support. So if this is a consolidation and this thing takes a run, I mean, we are talking of a potential move to 32. It's just now entering a seasonally strong period of time. So it really has been underperforming the market as the overall S&P, as you can see here. It's probably not on a lot of people's radar. It's definitely not on the fast money guys, CNBC, because it's not a high flyer or momentum name. It's not a Tesla. It's not anything that's going to really attract a lot of attention. It's probably not going to do a whole lot. But I think if this thing, it did generate a weekly buy. It's entering a seasonally strong period of time. It just doesn't have the volume to go with it yet. So how I would play this is real simple. I wouldn't want to see it if Masco breaks over 20, this high last week on a daily closing basis, and I want to see if we get a pop in volume. And if we get a pop in volume and this thing starts to move, then it's the time to get in it, because this we could see a longer consolidation, probably one more peak towards the end of this month, which would get us down under 20 bucks, $19. So, you know, these are some of the names that I just wanted to go over with you that I think have some really great potential moving forward. So with that said, watch for your tweets. I think last week we had some really good information, great information out for you guys. Whether you use it or not, it's a process. It's a learning process to see what's going on. And that's what we're here to do. And I just wanted to follow up with what we discuss in planning and scanning. With that said, I hope everyone has a great trading week, and keep your eye out for those tweets. Take care. Thank you all very much.
Prices.